This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Waiting for the number. Did hiring rebound in September after a disappointing August? What Wall Street and Main Street should look for in tomorrow's monthly employment report.
Kicking the tires, the world's best-known investor, Warren Buffett, is buying one of the nation's largest auto dealership chains. But why now, when some experts say demand for cars may be peaking?
What's in store? Tonight, we look at what's next for bonds and commodities as an increasingly fractious 2014 enters the fourth quarter with the year's investing game on the line. All that and more tonight on Nightly Business Report for Thursday, October 2nd.
Good evening, everyone. A turbulent day on Wall Street as stocks posted deep early losses before closing mixed and little changed. That up and down trading followed steep declines in Asian and European markets after the European Central Bank left interest rates unchanged today and provided few details about plans to purchase bonds to juice the Eurozone economy. Here's how things looked at the closing bell. The Dow lost just 3 points. That's after being down as much as 130 points. The Nasdaq actually rose 8 points, and the S&P was a fraction higher. Now, some good news about jobs might have helped investor confidence, especially come a day ahead of the September jobs report. First-time jobless claims unexpectedly declined by 8,000 last week, falling to an 8-year low. But will that be enough to lift hiring for the month? Hampton Pearson looks ahead to tomorrow's jobs report, who's finding work and where those jobs are coming from.
Leading economists predict a job market rebound in September from the surprising downturn in August that saw employers adding just 142,000 workers to payrolls, breaking a 6-month winning streak of more than 200,000 jobs per month. New claims for jobless benefits fell again last week. The 4-week moving average is now below 300,000, moving back to pre-recession levels. And planned layoffs from major businesses are at their lowest levels in more than a decade. Data earlier this week predicts strong private sector job growth, up 213,000 in September, according to payroll processor ADP, with the accent on better paying jobs.
It's across every industry and across every company size. And looking at other data, it's the quality of the jobs of the job growth is improving. If you go back early in the recovery, it was mostly low paying. 2 to 3 years ago, we started to see some high paying. Now we're seeing job growth across the spectrum.
Manufacturing and construction have slowed in the last 2 months.
This is going to be your first new car.
And auto sales, while still on the rise, are off the record pace of a year ago. But those new jobs and lower gasoline prices are boosting incomes and consumer spending. That's according to the latest government data. The September jobs report could be a key indicator of what lies ahead for the economy in the fourth quarter.
Even while we have seen some positive momentum in recent economic numbers, it really has been somewhat of a fits and starts kind of recovery. You know, a few good quarters and then all of a sudden a big negative surprise. And that makes it very hard to forecast.
At 6.1%, the unemployment rate is historically low. But going inside the numbers tomorrow, leading economists will be looking for signs that more people are coming off the sidelines and back into the labor force because they believe their prospects for finding a job are improving. For Nightly Business Report, I'm Hampton Pearson in Washington.
And what about small businesses? What's holding them back from hiring? We'll have that story a little later in the program.
Sluggishness in the Eurozone is contributing to a weaker outlook on the global economy from the head of the International Monetary Fund. Christine Lagarde said today that this year's modest worldwide economic rebound has not been as strong as her group predicted just 6 months ago.
The global economy is weaker than we had hoped only 6 months ago. So there is recovery, don't get me wrong, but it's weaker than what we had thought. And we forecast a modest pickup in 2015 and that's an important factor, the outlook for potential growth has been pared down.
Lagarde says the whole world needs to aim higher and try harder.
And that sentiment was echoed today by the head of the European Central Bank. After leaving interest rates unchanged, Mario Draghi made it clear there won't be any more rate cuts, even after admitting the region's economy is in trouble.
The economy is still fundamentally weak. I've said many times our recovery is weak, fragile, uneven, and still is.
But Draghi says policymakers will take action if inflation targets aren't met and that the threat of deflation increases.
Just like stocks, oil prices also bounced up and down all day today on worries about weakening global demand and a glut of supplies. Steep losses early on in the trading day saw U.S. crude sink to $88 a barrel before rebounding and ending 28 cents a barrel higher, as you see there. International Brent crude fell for the third straight session to its lowest level in more than 2 years.
So how do all these global issues impact investors? Let's talk more about that as we continue our special look at investing themes for the fourth quarter. Tonight, we focus on commodities and also the outlook for bonds. Joining us now, Meg McClellan. She is Global Head of Fixed Income Strategy at J.P. Morgan Asset Management. Meg, thanks for joining us. Let me start off with just asking you, what is your outlook for bonds and for U.S. Treasuries, and where do you see the yield on the 10-year by the end of the quarter, by the end of the year?
We believe through the end of the year that you're going to see interest rates very range-bound, and there's a number of reasons for that. Well, fundamentally, growth and wage inflation are picking up in the United States, which would argue for higher interest rates. You have a lot of geopolitical uncertainty out there. So think about the protests in Hong Kong, a potential slowdown in Chinese growth, and certainly we're going to be watching closely the labor market numbers tomorrow that will keep that potential rise in check. There's also a lot of foreign buying from countries in Europe, also in Asia, that are looking at the higher yields in the U.S. and thinking they look relatively cheap to a 90 basis point German 10-year yield. So that's going to help us keep a lid on interest rates. So our view is probably a 50 basis point range or so, say 2.50 to 3% heading into year end, given the balance between fundamentals having a good story and technicals actually driving those interest rates down.
So it sounds like you don't see, Meg, a lot of risk in owning bonds, at least treasuries right now, because some of that foreign money, I was going to ask you where the money's coming from, and you just answered it. A lot of it's coming from Europe.
A lot of it's coming from Europe. A lot of it's coming from Asia. Also, a lot of it, is insurance companies and pension funds here domestically that have to do asset liability matching. They need to buy fixed income. They need to buy higher quality fixed income. And because of the Federal Reserve Purchase Program, they've been competing with the Fed for those assets. So that's also helped keep rates low.
All right. Let's bring Tim Gramatovich, Chief Investment Officer at Paratus Asset Management, into this conversation. Tim, let me ask you about oil prices, because you pretty much cover commodities. They've been coming down a lot recently, and so have gasoline prices. What is your outlook on oil prices, and where do you think they'll be by the end of this quarter?
Well, Susie, I think that there's obviously a short term and a long term. I think commodities in general over the last, certainly the last few months have really taken it on the chin. And two of the three factors really relate to sort of commonality. One being a much higher U.S. dollar. The dollar's obviously gone parabolic here in the last, month, bringing down the prices of all commodities. The second factor, Meg had touched upon it, in terms of just global economic weakness in general, right? I mean, you've got a really recessionary conditions in Europe, very poor conditions in Japan, and China slowing. So that's those are the particulars in general. With oil, I think that you're really putting in a bottom here. You have a couple of issues that are going on. One, obviously, you have seasonality in the oil business, meaning that refineries take turnarounds. There's obviously a slowdown in demand, as mentioned before, the dollar. But I think what people are missing, and I think it's a massive opportunity for investors, is that production heading into 2015 is not going to be anywhere near as robust as people believe it is. I think the delusion that everybody is suffering that somehow that because we're drilling out 3 zones in the U.S. that everything is hunky-dory. It isn't. If you look at the globe, and Tyler and you guys cover this well, You look at Libya, you look at Iraq, you look at Venezuela, and now the information coming in from Russia based on sanctions, et cetera. This is all going to kind of play through in 2015, and we're looking for a very, very big bounce in oil.
So I hear you saying to consumers, enjoy these low oil prices while you can because they won't last. Let me get your very quick thought on two other categories of commodities. One would be the metals. I assume you're going to say that that's an economically driven issue. And the other are the agricultural commodities, wheat, corn, and so forth, whose prices have come way down.
Right. Tyler, I think that the issue is on your first point. 100% right. Again, it is a nice offset right now for U.S. consumers in terms of gasoline prices. I'm not a believer that they're going to hold down at these levels. Turning attention to the metals, obviously the metal that everybody's obviously interested in is gold. Gold is interesting. I mean, it stopped going down. I mean, it certainly hasn't done anything. I mean, it's in that low 1,200 area. And we've done a little bit of work, and we're primarily putting on our themes with debt. And so one of the reasons that we like gold, in particular gold bonds, is that all-in sustaining costs for gold across the globe is around $1,250. So you're below that at this point, which simply means that your capacity additions stop. Companies start building cash instead of building out mines and production, shrink it. So I think gold is interesting. But Tyler, I'll tell you one other thing that I think gold is interesting because of, and that is that all of this activity that the globe has been engaged with in terms of, whether it was QEs, call it government manipulation, if you will. At the end of the day, has it worked, right? I mean, it's done some good, yes, but I think people will grow tired of paper currency and they will come back to gold.
All right, Tim, we're going to have to leave it there. Interesting stuff, though. Thank you so much, Tim and Meg. Meg McClellan at JP Morgan Asset Management and Tim Gramatovich from Paratus Asset Management.
The Ebola crisis is impacting ExxonMobil's operation, so says the CEO there. The oil giant is prohibiting employees now from traveling to West African countries experiencing Ebola outbreaks. And it's disrupting plans, apparently, for exploratory drilling that the company had planned to engage in off the coast of Liberia.
Turning to politics now, the midterm elections are about a month away, with the balance of power in the Senate up for grabs and the economy playing an increasingly bigger role for candidates. One of the Senate races that's too close to call is in Colorado. John Harwood has more from the Rocky Mountain State.
We're now about a month out from Election Day, and Democrats need to win this state of Colorado to keep control of the United States Senate. In the dozen battleground states that matter most, the improving economy so far hasn't helped Democrats with voters nearly as much as they'd like. With this week's Conference Board report showing a fresh drop in consumer confidence, President Obama went to Chicago today to talk up the economy and the role his policies have played in recovery from recession.
This progress has been hard, but it has been steady and it has been real. And it's the direct result of the American people's drive and their determination and their resilience. But it's also the result of sound decisions made by my administration.
A lot has been said about women's health recently.
Instead of the economy, Democratic incumbents like Mark Udall here in Colorado have been targeting women voters with issues like abortion and contraception. Udall's Republican challenger Cory Gardner wants to change the subject to economic anxiety, even though Colorado's unemployment rate is a full point below the national average.
Well, Senator Udall clearly is a social issues warrior. That's what he wants to campaign on. That's what he's made his career on. I think the people of Colorado are talking about the economy. If you look at the last several years, the median household income has declined by over $4,000. People are working fewer hours every week thanks to Obamacare. It really is a veneer. You scratch the surface of the economy and there are people really hurting.
Tomorrow's jobs report will provide another signal of where the economy's headed as Election Day draws closer. President Obama hopes it gives Democrats like Mark Udall something to brag about. For Nightly Business Report, I'm John Harwood in Morrison, Colorado.
Still ahead, would you buy a car from Warren Buffett? Why the world's premier investor decided to get into the auto selling business. Warren Buffett is getting into the auto business. Buffett's company Berkshire Hathaway has bought the 5th largest auto dealership group in the U.S. Selling and servicing cars has become a very lucrative business in recent years as auto sales and the economy have rebounded, and that's caught Buffett's attention. Phil LeBeau has more.
It's the big business that's made a big comeback, running an auto dealership. Now Warren Buffett's Berkshire Hathaway is getting into the game, buying the Van Tuyl Group, which is the majority owner of 78 dealerships around the U.S.
This is just a very, very good operation. He has this partnership approach that he has worked extraordinarily well. He's just kept adding dealerships over the years.
Buffett wants to sell and service cars because it's incredibly lucrative. Last year, the average dealership's net profit was almost $1 million, more than doubling in the last 5 years, with the biggest earnings coming from the service departments, which have flourished as Americans hold onto their cars and trucks longer.
Well, if you stand in our service departments, the average mileage of a car coming in our service departments is 70,000 miles. So that's the highest it's been that I can remember all my life, and I've been in this business for 40 plus years myself, right? So there's a lot of old vehicles out there that still need to be replaced.
Berkshire is buying into the business at a time when auto sales are so strong, many believe demand for new cars is close to a peak, which raises the question, is future growth limited? Buffett doesn't think so. He says there's still room for consolidation with thousands of independent dealers around the country. And even if the economy starts to slow, Buffett knows there will still be people buying or servicing their vehicles.
The fundamental demand for cars is not going down. The average dealership will do a lot more business now than it did 30 or 40 years ago in terms of units.
Don't be surprised if Buffett drives further into the auto business. In fact, he says he'd like to buy even more dealerships. Berkshire Hathaway Automotive. Have they got a deal waiting for you? Phil LeBeau, Nightly Business Report, Chicago.
A number of auto dealership stocks getting a bounce off that investment by Buffett today. AutoNation up 6%, Sonic Automotive almost 3% higher, Lithia Motors shares revving 10%.
An update now on that massive cyber attack this summer at J.P. Morgan Chase. The nation's biggest bank now admitting that financial data on 76 million households and about 7 million small businesses was compromised in the breach. The bank maintains that customer money is safe.
The shakeups continue at Allianz, the big German insurer. Last week, superstar bond investor Bill Gross abruptly left the company's mammoth U.S. asset manager PIMCO. Today, it was the CEO. Michael Diekman will step down next spring after more than a decade as chief executive. And late today, there were reports that Charles Schwab is dropping PIMCO's flagship fund, the PIMCO Total Return Fund, from its 10 target date funds. And Sears is cutting its stake in its Canadian unit, and that is where we begin tonight's market focus. The cash-strapped retailer says it will raise up to $380 million by selling a large portion of Sears Canada. This ahead of the crucial holiday shopping season. The move comes after a year-long attempt to find an outside buyer. They couldn't. The $380 million price target is about half what the company had previously said it was worth. Shares nevertheless popped about 7.5% to $27.06. Shares of Wayfair surged in the company's trading debut on the NYSE. The online home goods retailer offered 11 million of its shares at $29 apiece, above the expected range. The company will take in almost $320 million from the sale. Shares 30% higher, $37.72.
The founders of GoPro announced that they are breaking a lockup on their shares of the company to set up a new charity, and investors weren't too thrilled about it. J.P. Morgan, which managed the company's June IPO, agreed to release the founders from a restriction that prevents insiders from selling shares within a certain time frame after the firm's trading debut. The stock fell almost 7% to $85.46. And RealD, a company that supplies 3D technology to cinemas, received a takeover bid from Starboard Value. The activist investor offered $12 a share. RealD says it's reviewing the offer. Shares rose 27% to $11.78.
After a massive investment of capital, Alcoa opened the world's largest aluminum lithium manufacturing facility today. It'll make aircraft parts there. So does this mean U.S. production for the aerospace industry is ready to take off? Morgan Brennan has more from Lafayette, Indiana.
What are some of the products that you're making here?
So what this plant does is make aerospace products, which will go into commercial airplanes, military airplanes, and other defense applications. And this plant in particular makes the most advanced aluminum lithium alloys on Earth.
This is Alcoa's brand new $90 million aluminum lithium facility, the biggest in the world. This plant will generate 44 million pounds of the lightweight super strong alloy per year, all to be used in aerospace. Parts will be manufactured for Boeing, Airbus, Gulfstream, and Pratt & Whitney, which inked a $1 billion multi-year deal with Alcoa for a brand new invention.
What we did over 7 years of development with Pratt & Whitney, in just an incredibly deep technological collaboration, is we created a fan blade that changed the game. It's lighter than titanium, it's cheaper than titanium, it's even lighter and cheaper than carbon fiber, and outperforms them both.
Aerospace is a high-growth, high-margin business for aluminum makers, and years-long backlogs mean it's a business that will last a long time. But perhaps most importantly, it's not a revenue stream hurt by the weak aluminum prices that have hit Alcoa and its competitors so hard since the recession.
If you can be on the cutting edge of application development, so that when a new airplane is being designed or a new engine is being designed, and you're the one at the table with the customer, then in many ways you're insulated from commodities because you're not making a commodity.
Analysts say Alcoa has been on the forefront of this shift from smelter to advanced manufacturer. From the auto industry with Ford's new aluminum-paneled F-150 pickup to SpaceX rockets.
The fundamental commodity strength in the aluminum market has really propelled the stock over the last 12 months or so. However, Alcoa is also going through a transition where they're focusing more on their value-added products. And this is in their particularly in their aerospace products.
Those products pulled in $4 billion in 2013, and analysts expect Alcoa sales to grow dramatically by the 2020s, thanks to new facilities like this one and the company's $2.8 billion acquisition of engine parts maker Firth Rixson. Other aluminum makers like Constellium and Kaiser Aluminum have been increasingly focusing on aerospace as well. As for this brand new facility, it already has $100 million in revenues booked for 2017, a sign that this business is set to fly. For Nightly Business Report, I'm Morgan Brennan in Lafayette, Indiana.
Coming up, Wall Street and Main Street are waiting for tomorrow's report on how many Americans got jobs in September. Tonight, we look at why many small businesses are reluctant to hire. That's next.
Federal judges ruled there's no constitutional protection for public employee pensions in a municipal bankruptcy case. The city of Stockton, California, thought it had to make pension payments to CalPERS, that's the California Public Employee Retirement System, before bondholders and other creditors got paid. But the ruling allows the city to treat pension obligations like any other debt, meaning it can start cutting those retiree contributions. Now, that ruling is expected to be appealed.
Some good news about hiring from small business owners. The latest monthly survey from the National Federation of Independent Business shows that small companies hired workers at the fastest pace in 8 months in September. That's a sign that the job market continues to gain strength.
That survey showed an average gain of just 1/4 of one employee getting hired last month per firm. That means a lot of other small businesses are just not taking on new workers. So what's holding them back? Ahead of tomorrow's Big Jobs Report, Kate Rogers takes a look.
Ask small business owners what's bothering them, and you won't find a single answer.
This is for that order that we're donating, right?
For Ken Jarish, owner of Jarish Bakery near Chicago, it's wages that have him worried.
And the reason that's prohibiting me from hiring more people is that many of our staff, our wait staff, are high school kids, and many of them, I find it hard to pay them a higher rate, like $10 or even $13 an hour, and then still have to train them.
On top of that, rising health insurance costs have Jarish concerned he'll have to hike his prices, which could drive customers out the door.
And those expenses, those training costs, add up quickly. Just this morning, my insurance broker was here. We looked at our renewal for this year. It's going up 6%. I can handle that. I'm not happy, but I can handle it. we looked at what potentially next year is going to be, it's over a 30% increase.
And it's not just wages and health care that have small business owners concerned. Some on Main Street say an overarching regulatory environment is adding to the frustration, with resource-strapped small business owners often doubling as compliance officers.
You also have to remember that, especially for a small business, it's the business owner who, him or herself, is complying with these regulations when they ought to be going out and building their business, recruiting new customers, mentoring employees, and building a strong business.
But even amidst the uncertainty, there's been some encouraging signs. PNC's latest economic outlook survey for small businesses showed that the number of businesses that plan to hire hasn't changed over the last 6 months, but that hiring is still much stronger than it was a year ago. And the NSBA says the environment could improve further following midterm elections.
I think there's always a bit of optimism after any election. And especially if that optimism can snowball into a little bit of progress on getting a handle on our long-term issues as a country.
What can I get for you? But for Jarish, who's concerned that higher costs could take a toll on his business, the outlook for hiring at his bakery is cloudy at best.
That gives me absolutely no incentive to hire additional staff. Replacement staff, sure, but additional staff, I don't see it.
And for a labor market that's driven by hiring among small business owners, that could be troubling news. For Nightly Business Report, I'm Kate Rogers.
And that is Nightly Business Report for tonight. I'm Susie Garup. Thanks so much for joining us tonight.
And thanks from me as well. I'm Tyler Mathison. Have a great evening, everybody. We will see you back here on Jobs Friday tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garup with a Nightly Business Report news brief. A turbulent day on Wall Street as stocks posted deep early losses before closing little changed. That up and down trading followed steep declines in Asian and European markets after the European Central Bank left interest rates unchanged today. The Dow lost just 3 points after being down as much as 130 points. The Nasdaq rose 8, the S&P rose a fraction. Some good news about jobs may have helped investor confidence. First-time jobless claims unexpectedly declined by 8,000, falling to an 8-year low. J.P. Morgan Chase says this summer's cyber attack involved info on 76 million customers and 7 million small businesses. And Warren Buffett's Berkshire Hathaway is buying the Van Tuyl auto dealership chain. Be sure to tune into Nightly Business Report right here on your public television station.